webinar. Well, good evening, everyone. Welcome to the National Fairtax webinar. I'm your host, Mark Maneri, joined by my colleague, Larry Walters. And real briefly, we've got a number of people on the line tonight from all over the country. It's wonderful to see. And I just want to acknowledge a few people here who've really done a great job in helping to promote tonight. Ron Malero, Randy Fisher, Mike Simmons, of course, Larry. We thank you guys for putting in the time and the efforts to really drive our attendance tonight, and you're very well appreciated and under-acknowledged. So thank you for all you do to support the Fairtax. And thank everyone who are tuning in tonight for being here. There's a lot of other things you could be doing tonight, so we appreciate you as well. So we're going to get started here, and for those of you who just joined us late, you're all on mute, and we encourage you to ask as many questions as you can. You can put your hand up, or you can type a question at the bottom of your control panel, and we'll be giving everyone a 20-minute overview of the Fairtax. Pause for questions. Talk about our special topic tonight, which is going to be sharing where each candidate is around tax reform, so that'll be interesting to see, and then finish off by answering people's questions. So I'm going to go ahead and get this started. And once again, thanks for tuning in. So, you know, one of the things that I love to speak about when I discuss the Fairtax is that it is simple, fair, and transparent. And you can see by the graphic on the screen right now that we've got a tax system. It certainly isn't simple. It's over 75,000 pages now, and it's not fair, and it's absolutely not transparent. And unfortunately, there's a lot of our elected officials who'd really like to probably keep it that way. And one of the reasons why we like the Fairtax is because it is extremely simple, and we'll get to that in just a second. Now, I've got some people typing in saying that they can't hear me. I just want to do a sound check with my colleague Larry. If you could come off mute, Larry, and can you hear me okay?
I hear you very well, thank you. If you're having a hard time, if your system is not receiving or the volume is too low, you might want to try the audio checkout feature that GoToWebinar offers, and maybe you can fix yourself there. Otherwise, the speaker volume control on your computer may be the culprit also. Mark?
Yeah, great, thank you. Good, so we've got to get to a much more simplified system and something that's fair and transparent. And the Fairtax is just that. And the Fairtax also does is it unwinds what we believe are the 7 really key wrongs that exist in our current tax system. So convoluted, punishes growth, lack of transparency, loopholes, it's incredibly inefficient, impedes privacy. You've got winners and losers. Of course, there's people on the inside. A very small percentage of people are the winners who know how to manipulate and have deep pockets to manipulate the system. And the vast majority are losers, unfortunately. And then it's incredibly time-intensive and laborious. So, you know, all of these reasons are valid, and we've got to undo these, and we believe that the Fairtax does that. So if you're really brand new, and I've seen a lot of familiar faces out there on the webinar, and thank you for joining us again. We appreciate you coming back and showing your support and your loyalty and your commitment to this really important piece of legislation. If you're brand new and you've never heard the Fairtax at all, well, what you need to know is it's legislation that actually exists right now in Congress, in both the House, and the Senate. And so we've got to, through a grassroots movement, we have got to communicate with our elected officials and move this forward, because the legislation is there, it's been written for years, and now we've just got to get more supporters to influence their elected officials. We'll get into that a little bit later on here. So let's talk about the Fairtax and why it undoes these 7 wrongs, if you will, that exist in our current tax system. So number 1, simple, right? 131 pages double-spaced compared to this over 75,000 pages. I've read this legislation, guys. You can go to fairtax.org and download it and literally read this and understand it. That's refreshing. So simplicity, I love the adage that says sometimes when it's simple, it's right. And the fair tax is right. So the fair tax supports growth. So let's talk about what that looks like. So the fair tax is a consumption tax. It's a sales tax. It is not an income tax. And you only pay taxes on what you spend, not on what you earn. And so part of what's written into the legislation is that once the fair tax gets passed, loads of federal taxation gets rolled back, and it repeals the 16th Amendment, which would forbid Congress to tax our income. And so, there's a lot of taxes that the fair tax would repeal. The payroll tax, Medicare, the payroll tax, FICA taxes, the death tax, the estate tax, the alternative minimum tax, capital gains taxes, personal and corporate income taxes. All of these things go away, and the fair tax, a national sales tax, gets implemented, and we have a tremendous amount of financial benefits that occur as a result. So let's talk about what some of those are. So number one, there's an estimated 13 trillion, and yes, you are reading that number correctly, 13 trillion in assets, cash, sitting in offshore bank accounts. These are wealthy individuals and corporations that are parking that money offshore so that Uncle Sam doesn't get his hands on it. And who can blame them? And so when the fair tax gets passed, well, guess what? There's capital gains go away, personal and corporate income taxes go away, and that money starts to flow back organically, which is a key word, organically back into our money system, back into our economy. And look, there was a great survey done by, I forget who actually executed the survey. It was done for millionaires and wealthy business owners. And the survey was basically, hey, what would you do with your money if it wasn't going to get eaten up by taxes? And the answer was, well, we do what we know best with it. We would reinvest it in our businesses to expand, so we would make more money faster that way than just parking it into an interest-bearing account offshore. So this is a huge thing, guys. Imagine $1 trillion coming back into our economy organically, and businesses and corporations and entrepreneurs using that money to expand their businesses. What would that do? It would create a massive amount of jobs, and spending would increase, and that would jumpstart our economy in a big, big way. All right, U.S. would become a corporate headquarter haven. What do we mean by that? Well, we would have the lowest effective corporate income tax rate in the world, 0. And companies from all over the world would begin to relocate their corporate headquarters, international headquarters, to the United States. Now, how do we know this is true? Because American companies are already doing it. They're leaving the United States to go build their offices and relocate corporate and international headquarters to countries like Ireland that have lower corporate tax rates. So think about it. When all these companies start opening offices over here, we're going to build, which creates jobs. They're going to need to hire, jobs. More people are going to have more money, more disposable income than ever before because, again, we eliminate the income tax. There's no more withholdings in our paycheck. The average American income goes up by 29%. Guys, we are going to see an economy quantum leap like we've never seen before in our lifetime. It's really going to be extraordinary and quite exciting to think about. So the other thing that the Fairtax does is it broadens the base. And every single individual in the United States pays their fair share. So right now, likely you know if you're on this webinar that really actually only about 50% of Americans actually pay taxes. And the rest, through incentives and through loopholes and through rebates, et cetera, actually don't even contribute to our tax system. So what the fair tax does is it broadens the base, and including the underground economy now becomes under the umbrella of taxation. That's estimated at $2 trillion. So what do we mean by this? Well, the 50% of Americans who aren't paying taxes pay their fair share, because every single time somebody goes to the grocery store or to the mall or buys a new house or a car, they pay, right? So, and of course, the people who are avoiding taxes altogether illegally right now, you can't get around it, right? Because we've got a sales tax now. So we've got some very smart things start to happen when we move from an income tax system to a sales tax system. And these are just a few of the highlights that will make a huge difference for us. All right, so the next thing we roll back, this lack of transparency. Well, fully transparent. There's no loopholes, right? So think about it. There's only one tax. It's a consumption tax on new retail goods and services to the tune of 23%. You're going to see that on a receipt. You know, one of the examples I like to say or use with the fair tax is if you went to the mall and bought a pair of designer jeans, and the price tag on those jeans was $100. Well, when you'd go check out, you'd actually pay $100 because the fair tax is inclusive, meaning it's built into the price. It's not 23% times the price tag you see. It's inclusive. And you'd get a receipt, and on that receipt it would say 77 bucks went to Banana Republic or Gap or wherever you buy your jeans, and 23% was United States government, national sales tax. Transparent. So imagine we get to see what it actually looks like, what Congress is doing behind the scenes. And if they try to go do something without all of their constituents approving it, and that number goes to 24, 25, 26, or whatever, well, guess what? We know. And right now we don't know. And unfortunately, that's one of the reasons why we have what we have, because Congress gets to act in darkness. They've got things that they need to pay for in their projects for their districts. Guess what they do? They go manipulate one of the 75,000 pages in our current tax code, and we never know about it. No transparency. Well, that would change everything under the fair tax. All right, so efficient and simple to collect. So check this out. I love this. Currently, 45 states collect a state sales tax. We've already got the infrastructure in place. So these states would collect from businesses. This is a big shift. You, as an American individual citizen, you simply pay your taxes every time you go and you spend money on a new good or service. That's it. You don't have to fill out any long forms anymore. You don't have to hire, expensive accountants. None of it. So, and look at how smart this is. We get 80% more efficient. Instead of trying to collect from 120 million households, we collect from 18 to 20 million businesses. That's just smart. And so we'll have the state sales tax bureaus will collect from the businesses. There's one form to fill out. What are your gross revenues times 23%? That's how much you need to send in. That's it. And so the states and the retailers are incentivized 0.25% for the collection of the sales tax, and to create a fund to effectively police it. But it is going to be much easier to collect this when we get 80% more efficient. So again, we've got some smart things happening here, and I hope you can see that. All right, so here's a couple of other things that we need to consider in terms of being really efficient here. The IRS costs $13 billion to operate. In the Fairtax legislation, we would literally undo the IRS over a 3-year period, and it would cease to exist anymore. Here's the other thing. The IRS currently only collects about 75% of the taxes. So it's just incredibly inefficient, the system that we have right now, for so many reasons. So the next thing we evolve in is privacy is protected, and you know, we get more efficient that way. You pay your taxes when you make purchases, as I've already shared. You don't have to fill out any detailed forms, and April 15th becomes another spring day, right? The federal government doesn't have any access to any of our personal information anymore. And I think there's a lot of people that would really resonate with. Fairness. So let's talk about fairness. And this is a really important point. What we're going to talk about right now is going to speak to how the fair tax is fair amongst all income earners, wealthy Americans, middle class Americans, and lower income class Americans. And it creates a proper system for ensuring that no one pays more taxes than they should. So let's look at it. So the prebate is a dollar amount that actually flows into every qualifying American's bank account at the beginning of each month, reimbursing them in advance for the fair tax they pay, for the national sales tax they pay on purchases up to the poverty level. Here's what that looks like. So move your eyes to the right side of the screen, down to the green cells. And let's say we've got a 2-adult household with 2 kids. So we've got an average 4-person family. Well, the Department of Health and Human Services in the federal government, independent of anything else, independent of the fair tax, has deemed that a family of 4 who spends $31,860 is spending at the poverty level limit, which means any money they spend from 0 to 31,000 is covering just their basic necessities. They are living at the poverty line. So if you multiply that spending, and remember, the new tax system would tax our spending, not our income. You'd multiply this 31,000 times 23%, that's the fair tax rate, and you'd get $7,328. And if you divided that by 12, $611 is what a family of 4 would be paying in taxes under the fair tax based on poverty level limit spending. This is the exact amount of money that would flow into this qualifying family's household at the beginning of the month, reimbursing them in advance for the fair tax that they'd be obligated to while they spend during that month. So it's a brilliant element to the legislation here. It's well thought out because it assures that all Americans don't pay taxes on basic necessities up to the poverty level, and obviously ensures that lower income Americans aren't hurt by this. Smart. So the other thing that's fair here is that we don't end up hijacking our pricing system. In other words, it'd be real easy to think, if this is your first acclimation or exposure to the fair tax, that, wow, okay, so all these taxes go away, income taxes, etc., but now prices are going to go up by 23%. Oh my gosh. Yeah, not true. That's not what happens. Really important that we understand this. So here's how to really understand it in its most simple form. Right now, in our current system, we're paying income taxes. We're also paying a national sales tax. We just don't know it. It's called embedded tax. And what that means is it's reflected in everything that we purchase when businesses pass off their business income taxes and costs to comply to the federal income tax code to the consumer. So what does that mean? When a business is figuring out their profit and loss statement, a line item on their expense side are costs, hiring accountants and tax people, and real time spent on it, among other things. That's real dollars. Well, guess what? That's a line item that goes into their profit and loss statement. So when they figure out pricing, this is factored in, which means that we pay for their income taxes in essence, because they're passing them off to us in the form of higher prices at the cash register. We call that the embedded tax. It's very real, and it's approximately 22% across all retail verticals. So in other words, the housing industry, the automobile industry, manufacturing, services, et cetera, these all have slightly different embedded taxes based on the type of business that it is, but on average it's about 22%. So that goes away. Why? Because corporate income taxes go away with the fair tax. Costs, therefore, to comply to the tax code go away. So that 22% goes away. The fair tax replaces it to the tune of 23%. We expect prices to increase in the first year by about 6 to 10%, somewhere in that range. And then as businesses in the marketplace becomes more competitive, that will come down, because one of the most basic ways businesses are going to compete for more business is to lower their prices. Really, really, really important to understand this. A great example is in the housing industry. So let's say a home builder, a business, builds a brand new home, because the fair tax is only levied on new goods and all services, not used goods. So here's a good example of this. The fair tax, the home builder goes out and they buy a whole bunch of things to build their house. Bricks and land and wiring and all the things that go into a home. Well, they build their home and then they sell that home for the very first time to the consumer. The fair tax of 23% is embedded inside the cost of that home. So essentially the consumer who buys the new good, the new home, pays that. And the business is responsible for collecting it and setting it aside and remitting it to the government. Now, used goods are untaxed. So when that homeowner sells this now used home or resale home to another consumer, no fair tax is levied on it. All right. So we've got a smart system here, guys. We've talked about the benefits to the economy. We've talked about how the average American's income is going to increase by 29% because they now take home 100% of their pay. There's no withholdings anymore. We've talked about the simplicity of it. We've talked about the transparency of it. We've closed our loopholes. Why would anybody not want this? It benefits every individual. Wealthy American, middle class, lower income, businesses, it benefits everyone. We've demonstrated that. So why wouldn't we want this? Well, because we've got a power structure here. we've got lobbyists and politicians especially who see the fair tax and the simplification of an income tax code as a release of their power. And I've talked a lot about it up front. 50% of lobbyist guys are tax lobbyists. The moment corporate income taxes go away, they are out of a job. They're scared, right? They don't want to give up $1 million salary or hefty salary with all their benefits. And of course, they influence politicians by saying, hey, if you favor side of the fair tax, yeah, all that re-election money for your campaign, yeah, I don't think we're going to be able to come up with it this year. Like, that's literally the backdoor dealing that occurs here. So we've got to evolve, and the only way it's going to work is if enough grassroots supporters like you and I call their elected official, write their elected official, and say, you're not getting my vote unless you're a co-sponsor of this legislation. So we've got to step up and we've got to speak up. All right, so we did an overview of the fair tax. We had a number of good questions come in, and I'm going to pause us here, and I'm going to pull up our questions here, and we are going to answer a bunch of them. We've got a lot of them, which is great, and we'll go through some of them now. I'll ask my colleague Larry to unmute himself if he hasn't already.
Okay.
And then we'll go through our special topic. All right, Larry, here's one for you. I'm 64 years old. Will I see the fair tax actually happen in my lifetime?
That's a question that I ask myself. I'm a little older than that. I think you've got a good chance of it, to be honest with you. A lot more of a chance than I believed I had when I started becoming involved with the fair tax 8 years ago. We've made progress each year. It's very slow, a lot slower than my patience likes, but I'm learning to understand how Washington works and how trying to make humongous change happen. So I think you will. I cannot promise that. We just have to work as hard as we can, as smart as we can, and each one, practice each one, teach one, and teach them how to teach one so that we can expand the knowledge base of more people in the country that will contact their congressmen, their senators, and say, if you want my support, you have to support the fair tax. But I think we're in a good position right now, and if we can change the person in the White House at the next election and increase a couple in the Senate and the House, and we've got a very, very good chance of getting it to happen in the next 2 or 3 years. Mark?
Yeah, thank you, Larry. Larry, what is the number of co-sponsors right now?
Right now we have got, it's 70 in the House, and plus the primary sponsor, so that's 71, and 7 in the Senate plus the primary sponsor, 6 in the Senate plus the primary sponsor, so that's 7 there. So 71, 78 total.
Yeah, and for those of you who are interested, you can go to fairtax.org, and there's a link on that website called Congressional Scorecard, and you can pull up a list of who are the co-sponsor, who's not, and I believe, I haven't been on super recently, but I believe there's an opportunity where you can go on and type in your zip code, and literally it'll pull up who your congressman or woman is or senator is, and it'll say whether or not that person is a supporter. All right, Larry, here's one for you. Briefly discuss how the fair tax would transition from the current income tax without causing a massive sell-off prior to switching to the fair tax.
Okay. I don't know what you're talking about, a massive sell-off, but let's look at it this way. Right now, as Mark had pointed out, everything we buy, whether it's a product or a service, has embedded in it 20 to 25% in costs because of the embedded taxes and compliance costs of an income tax system. The majority of those go away. I say the majority because some of those costs the workers will be taking home in additional wages, which would be their FICA payroll deductions. they'll get to keep that now. Anyway, when those taxes, other taxes go away, we know that the costs of the goods and services through the pipeline will go down. And when it gets to the retail seller, that's when the fair tax will be added. So we are not anticipating a very large increase in retail prices, maybe 10%. However, we'll be realizing at least 29% in take-home dollars because of the 7.65% additional money we'll be bringing home instead of having deducted. That more than compensates for the increase in retail prices. Now, as far as the actual transition goes, it's set up to happen within a minute's time over the New Year's Eve, New Year's Day midnight clock tick, and it's a matter of just the programming. So the income tax system is abolished, the fair tax system is in place, and there will be time provided so that the programs at the various cash registers and whatnot will be updated so they can calculate and charge the fair tax after 12 o'clock on New Year's Day of the year that it's implemented. Businesses who have purchased goods prior to or under the income tax system will get to claim those goods, the taxes on those goods or the embedded taxes as a deduction from any tax that they have to pay starting in January of the new year. And that's to allow them to get rid of inventory in which they already paid taxes. One of the goals of the fair tax is nothing will be double taxed. And so they are not going to tax goods that were purchased under the income tax before the fair tax is implemented. Mark?
Yeah, really detailed. Thank you, Larry. Appreciate that. Okay. Is a new home purchase taxed at 23%? Oh, that was asked earlier on. So yeah, I think we covered that. So in that case, it would be embedded. If that home would be resold forever into perpetuity, then there's no fair tax levy because the fair tax occurs for a new good, but never on a used good. Larry, a Roth retirement account, Roth IRA, when its proceeds are spent, are they taxed?
Yes, they are. Another one of the foundations or cornerstones for the fair tax is there will be no exemptions except the used goods because that would be double taxation, and the cost of education fees. So your Roth IRA in which you paid the tax on under the income tax system will get taxed under the fair tax. However, don't forget that distributions that you take from IRAs that were pre-tax contributions you made, intending to pay the tax on them when you take them, they will not be taxed. Also, your Social Security income will no longer be liable for any taxation. Also, the embedded taxes that go away, the 20 to 25%, that is essentially a wash with the taxes you're going to pay under the fair tax from the money out of your Roth. So there may be a couple of pennies that will come out of it, and it is in technically double taxation. I do not think you'll miss it, and in my opinion, it would be a great contribution to America to get it free and get the economy rolling again. Mark?
Yeah. Yeah, so a question from Thomas, how are medical expenses, surgeries not covered by private insurance handled under the fair tax? So that would be considered a service, Thomas, and so the supplier, in this case the medical group or the surgery center, would embed the fair tax, and you'd be paying that when you go and spend money for whatever procedure you'd have to go get done. And again, remember what Larry just said, that you really won't recognize that because pricing will be relatively stable. Prices may go up a little bit, but at the end of the day, you're paying the embedded tax go out, the fair tax goes in, and you're going to pay your share of the fair tax on that service. All right, so let's see, from David, I've read the Fairtax book by Neil Bortz. Excellent. I understand the basics. How do you plan to get the Washington insiders in the government to support and pass this bill? Yeah, we spoke to it already. I'll speak to it again. It's a grassroots effort. Like, look, what do politicians want? They want to get reelected. Like, that's it. And so at the end of the day, if they've got a super minority, because we don't need a majority, but if they've got a strong minority in their district that say, hey, you won't get my vote if you don't support this thing, guess what? They're going to support it. It will happen. It's what politicians want. All they want from this perspective is to get back into office. So bottom line is we need to get enough people in each district to say, to communicate and say, hey, you got to sign on for this or count me out. So that's the only way to do it. And it's an uphill battle, David, but it can be done if enough people like tonight jump on a webinar like this and stay steady with it. Okay, so state, county, city taxes, are they on top of the 23%? David asked that question. Thank you, David. Yeah, so just depending on the fair tax strictly deals with funding the federal government, federal taxes. That's it. Whatever your state, your county, or your city are doing, the fair tax impacts none of that other than it likely influences those jurisdictions because they may see that eliminating, for example, your state may see that eliminating a state income tax and property taxes may be beneficial by replacing it with a sales tax. That might happen, but they're mutually exclusive. One does not impact the other. The fair tax is strictly federal, and anything that already exists with state, county, and city is going to be an addition.
There is a document available. Excuse me, Mark. There is a document available. I believe it's titled "How the Fair Tax Affects the State," and you can get that from the Fairtax.org website in their research department. It's a very good document.
Yeah. Larry, this one's for you. What is required by law in the fair tax legislation before Congress can change the rate?
There is no law. Congress, by the Constitution, has the power to lay and collect taxes. And for that matter, they could, if they chose to, implement a sales tax right now on top of the income tax that we're dealing with. And in fact, Mark will have something to say about that from one of the candidates for president a little bit later on. But there is no law that prevents that. There's no law that can be written to prevent that because that law would be in conflict with the United States Constitution. We, the voter, you and I, would be the power that either stops an increase in rates or allows it. And sometimes we might think that it is warranted, depending on what the issue is. And other times we might say, heck no, and let them know, just burn up their switchboard. Mark?
Yeah. Great. Thank you, Larry. All right, so just want to do a quick sound check. I've got a couple people saying audio is breaking up. Larry, can you hear me okay? I can hear you all right.
I have had no interruptions of your audio, and that first person that wrote in was talking about music on the system, and she has disconnected. She went away. So I don't know where she was getting music from, but other people reported in, and they didn't have any issues with the quality of your sound either.
Okay. All right, so let's do this. Let's shift to our special topic. And by the way, thank you guys. Like, what an active group. And just so everybody knows, we've got literally at least 20 to 25 questions left. And they're all good questions. We want to answer them. So normally this call is an hour. I'm going to say it's probably going to go to 9:15 tonight. So if everybody can stick around, we've got really a number of great questions, and it'd be good for everybody to stick around and hear them because The more you hear about it, the more you know. Knowledge is power here. So stick around. Let's look at our candidates. So what we've done here is I've taken, actually, I could easily take credit for it, but my colleague Larry was really instrumental in putting together this summary, and I appreciate you, Larry, for it. We've got a list of where candidates stand, and I'm going to also pull out my sheet here and speak a bit more about some of the ones that we got more information. So what Larry did was go to each candidate's website for presidency and pull off as much information as he could around where they stand on tax reform. So let's take a look here. Okay, so the first three are all people that we know to be strong Fairtax supporters. Now the third one down, so you got Huckabee, has always been a Fairtax guy. Kerry Bowers is probably someone some of you may not have heard of, but a brilliant individual who's running for president. Check out his website, and he's a strong Fairtax supporter. He's been on our national webinar a number of times. As you can see there, Ted Cruz is a co-sponsor. We've seen him wavering a bit, saying he would do a flat tax as well. You know, and that, you know, imagine that. Imagine a politician who's willing to just try to get votes, say what people want to hear. So he's trying to corral a number of different people who cater to the flat tax as well. Trump didn't have anything official. He's actually said on one of the programs that basically he said, you've got the fair tax, you've got the flat tax, either way you've got to simplify it. So other than that, we haven't heard a whole lot of specifics that are on his website. So you've got Marco Rubio. He wants to lower corporate and personal taxes, and basically what he would do is create two simple income tax brackets at 15 and 35%. And I'm scanning my notes here because he has just bear with me, everyone. I'm pulling up on my notes here. He's got a few more bullet points on that that I wanted to share with everybody here. So yeah, additionally, what he writes is he would augment the child tax credit of $1,000 with an additional credit of $2,500 against income and payroll taxes, and would not phase those out. Refundable against income tax and employer and employee payroll tax liability. Business would cut business and corporate income taxes from 35% to a rate that we're not yet aware of. So that's Marco Rubio. All right, so let's see here. We've got Rand Paul, replace the current tax code with a flat tax, 14.5%. Rick Perry, Rick Santorum, flat tax guys, lower tax rates across the board. John Kasich, Chris Christie, Ben Carson, you know, all these people really saying the same thing. And I'm, in the interest of time here, I'm going to scan over some of these because, quite frankly, we want to get back to the questions. But you've got people on their website saying very little about tax reform, just that in the cases that I just mentioned, at least on this screen, you've got people saying, yeah, we've got to simplify it, we want to lower it, we want to do a flat income tax across the board, perhaps no deductions, et cetera, et cetera. So let's go to our next slide here. And I had to pull out of my view here, so I'm going to get back to it. So thanks for bearing with me here. Yes, technology is great when it works. Almost there.
It's time for two screens on your notebook.
Yeah, that's exactly right. Here we are. Okay. Thank you, guys. So we've got Scott Walker, George Pataki, Jim Gilmore, again, very similar. Lower the tax rates. Let's do a flat rate. George Pataki, 12%. Jim Gilmore was interesting. Started a 15% rate on business income across the board. Individual income tax rates of 10, 15, and 25%, depending on your income bracket. And then we've got the two prominent Democratic candidates. Bernie Sanders didn't have anything going that we could find. And, you know, Hillary had a lot to say about it, but again, in the interest of time and space here, there was nothing about we've got to get rid of our tax code. There was nothing about moving to a fair tax or a flat tax. You know, I think she's very content to keep what we've got and just make some tweaks inside the 75,000 pages. And then all the rest, some Republicans, and you've got some Democrats there at the bottom who there was just no information on their website. So yeah, just to go back for a second as a quick review, you've got two, potentially three people that are strong fair tax supporters. I don't know that Trump would actually do a fair tax, but I'm certainly believe that he would shift to the current system significantly. And then everybody else pretty much looks at a flat tax, income tax. So remember, the big difference between the flat and the fair tax is a flat tax is still an income tax. And the reason why we don't want that is because they'll just jack it up again. So it doesn't really solve a whole bunch of the problems that we have right now by our current tax system. So there you go.
Yeah, they can
so
essentially, they can essentially,
I'm going to leave actually.
I'm sorry, they can essentially wipe out, abolish the income tax system we have and rewrite it based on whatever they come up with initially, whether it's a 17% flat tax plus your regular payroll taxes. They can add additional brackets to that later. They can add a AMT to it later. They can add anything they want. And so as long as they can protect an income tax of some nature, that's going to allow them to protect that wonderful goose that lays their golden eggs. And that's what we're battling up against. Mark?
Yeah. All right. A lot of questions to get to. Stay with us here. We've got one of our longtime supporters, Dave Leake, has his hand up. Dave, I'm unmuting you for the moment. If you'd like to speak, you have the floor. Do you have a question for us?
Shit.
You there, Dave? All right, Dave took his hand down. Dave, if you've got a question, you know how to write them in. Dave is a great supporter, so thanks for being here with us, Dave. All right, so this comes in from Greg. Greg writes, okay, you said gross revenue, but what about services? What if I'm a computer repair person? Do I tax on services? Yes, you do. So we covered that, and that was an earlier question, so I think we handled that okay. You know, every single registered business is going to be responsible for setting aside 23% of their revenues and remitting them to the government. But remember, you're not going to pay any corporate income taxes anymore. You're not going to pay personal income taxes anymore. You're not going to make any more expenditures on hiring expensive tax people anymore. So, you know, there's a lot of things that go to offset you having to collect the 23% and remit it to the federal government. All right. This is from Joe. Do you know how much is estimated for each state to collect in that 0.25% service fee? Do you know how much is estimated for each state to collect? You know, that's a good question. I don't know that I've ever been asked that. I think what Joe's getting at, Larry, is he wondering how much are they going to collect, and then if you multiply that times 0.25%, what's going to be in their budget?
That's what it sounds like. But you know, all I could say is that whatever their gross, whatever the state's GDP might be, Okay, you take 23% of that, that's what's theoretically going to be collected in taxes, and they'll take 0.25% of that 23%. As far as coming up with a number, it's going to vary from state to state.
Yep. Thank you, Larry.
So I'm sorry, I should have let
All
you
right,
know I
does
was
the
done.
board receive a rebate or does everyone receive a rebate on the first 50,000? So that's from Gary. So again, this was earlier in the presentation and we've talked about the prebate. Everyone gets the prebate regardless of income. What matters is whether or not you qualify, if you have a valid social security number, and everybody gets it. And based on the size of your household, you will get what the prebate schedule dictates that you get. We already shared for a family of 4, it's going to be roughly $611. So yeah, I think again that's fair, right? So, and then you look at it and you say, yeah, but what about the wealthy person? You know, why should they get that too? Well, guess what? They pay their fair share. People who make more money spend more money on the bigger house, the nicer car, the clothing, dinners, their health care, like everything, right? So every time they go spend money, they're contributing much more in taxes. The fair tax is very progressive that way.
Mark.
All right, state tax.
Mark.
So question, yeah, go ahead, Larry.
Also, there's another qualification for that prebate besides the Social Security account, and that's a legal residence in the country, which also says that illegal people, or even people who are here legally but not able to get Social Security numbers because they are not residents within the state, within the country, do not qualify for the prebate. We expect there to be an exodus of a lot of illegal aliens because their cost of living will go up from the first dollar they spend. Mark?
Yep. All right. Question from Thomas. Is the home builder taxed at 23% on all materials purchased to build a new home? Great question, Thomas, because I don't think we covered this, so I'm glad you brought it up. Business-to-business transactions are not taxed. So the home builder would go ahead and they would pay for their materials, and for each of the materials that they purchased where the fair tax was levied, they'd get a 23% credit. So that would go against whatever it is that they remitted to the federal government. In essence, business-to-business transactions do not fall under the umbrella of the fair tax. Did you say anything else about that, Larry?
No, but your audio is breaking up a little bit, Mark.
Okay. Well, let's see here. Let's see if I can.
Remember, one of the things is that under the fair tax, there is no tax on income of any form. So corporate taxes are eliminated, and corporate and business income taxes are eliminated. The only business that has any dealings with the fair tax are those who sell to the end consumer. They will collect the 23% fair tax on their sales and remit that to the state, who's going to be administering the fair tax and enforcing it. Okay, Mark?
Yeah. How am I coming through right now, Larry? Am I okay?
Yes, sounds good at the moment.
Okay. All right. What happens when a household, this is from Paul, earns the next dollar over the poverty level? Nothing. Because remember, income has become obsolete at this point, irrelevant. So again, whether you make a lot or a little or somewhere in between, it's the size of your household that dictates what you get in terms of the prebate. And I think that was really what Paul's question was relating to, is your prebate somehow affected based on how much you earn? It's not.
Nothing in the entire fair tax, I'm sorry, nothing in the entire fair tax program has any concern with income. You can go out and rob a bank, that's okay if you don't get caught, but when you spend it to buy that new Rolex, you'll pay the tax.
Yeah.
Mark.
And we don't condone robbing banks. uh, Larry, what about the hazardous materials fee and the taxes on that or associated with that from MF?
That's not a income tax. That's hazardous materials. I'm not sure what category that falls under within the tax code, but it's not part of the income tax, so it's not going to be affected.
Yeah, same question or similar question from same person. What about federal excise taxes on gas, oil, rubber goods, ammunition, etc.? What happens to those?
They are not affected.
Yeah. Okay, three-part question from Christopher. Number one, why did the fair tax go from 48 pages to 131?
From how many pages?
48. I wasn't aware of that.
Me either.
Okay, so question number one, Chris, we don't know because in my history of 6 years, I didn't know that the fair tax was ever anything other than 131 pages. Is the table for the prebate revised from time to time, and how? Yeah, great question. The answer is yes, and it's based on the Department of Health and Human Services poverty level threshold. So when that changes, then of course they're multiplying and they're figuring out the poverty level limit threshold. So when that beginning number changes, then of course when you multiply whatever that is times 23%, it's going to marginally impact it, but not by a lot. All right.
I just saw a message here that my audio is breaking up also. I don't know how you're hearing me, Mark, but if you and I are both breaking up somewhat, maybe it's not us, maybe it's GoToWebinar system.
Yeah, I hear you just fine, Larry. Yeah, and by the way, we had a couple of good comments from Ron Malero. Thank you. We talked about with the flat tax and what would happen, and Larry spoke to that and why we don't want that. Like, look, it won't stay flat because Congress just has, you know, they just their eyes get too big, right? And it'll get manipulated and it'll shift. Whereas when we got something transparent with 23% on all of our receipts, like it's really hard for them to move that around without like literally the entire population melting down the phone line saying, like, what do you think you're doing? Thank you, Ron. All right. Yeah, by the way, Dave, who we couldn't hear earlier, he doesn't have a mic. Thank you, Dave. Fairtax.org has a great FAQ section, and we encourage you to go check that out, and you can continue to learn and get educated there. All right.
There's a couple of hands up, Mark.
Got hands up?
Two Franks and a Gary. And you got David. Okay.
I'm going to stick with these questions here. Actually, I'm not seeing that on my end, Larry. So
they're gone now.
All right. With the fair tax, when a home is being built, does the builder or contractor pay taxes on all the goods and services? Oh, we covered that. They go into building the home. No, they do not. Thank you, Alice.
You might add on this one that a person who is in business, in order for them to not pay the sales tax when they purchase their materials, they're going to have to be licensed and have a tax exemption certificate in Florida. I don't know what it is in other states, but they'll have to have a tax exemption certificate from their state Department of Revenue, and they will provide that to whoever it is that they are purchasing from, so that they don't pay the tax when they're purchased, and they will only assess it when they sell the home to the end user, and then they will remit it to the state Department of Revenue. Mark?
Yeah. Thank you, Larry. David D. wrote in a great comment. Another benefit here is that there's no more personal audits. Always a good thing. Thank you, David. David Smith wrote, What if businesses don't pass on their tax savings to the end consumer? Well, they'll likely lose market share, and they likely won't have a choice, David. And that's one of the things here that'll drive prices back down to pre-fair tax levels. If an industry across the board has lowered their prices, typically everybody else follows suit unless their product or service is of a much higher quality, which people are willing to pay for if they perceive higher quality. So, I don't actually see that as, I just see capitalism being in our favor for this point here. Look, if everybody in my business is charging lower rates, I'm going to have a hard time charging my higher rate and not passing along my tax savings. Anything else you'd say to that, Larry?
No, that's fine, Mark.
So this is from Bob. We've heard this before. Thank you for writing this in, Bob. Bob says, the fair tax prebate is no different in one area of the country versus another. If the prebate covers the amount of tax paid on basic necessities, and it seems tax paid for basic necessities in San Francisco are different than perhaps in rural West Virginia. I know that paying different prebates in different areas would complicate things, but how would you rationalize someone in San Francisco would get the same prebate as a person in rural West Virginia? Larry, you want to tackle that?
Yeah, sure. This might sound a little bit crude, or anyway, it's no different whatsoever than the standard allowance allowed under the income tax system. Otherwise, there's no way to rationalize that other than the complexity of making it different for different areas of the country. That's the best answer I've got for that, Mark.
Yeah. A lot of people are asking if the webinar PowerPoint is available. Sure. The email that you got confirming you tonight, thanking you for being here, you could just reply to that and we will send you a copy. So another thing you need to check out, everyone, and thank you, Joe, for writing this in, is Popvox, popvox.com, and I'll bring that up on a slide here. Or is it on the slide here?
It should be.
I got my question screen up, so I can't see it. Yeah, it's the fourth bullet point down. Popvox is a website that allows citizens to go vote and weigh in on current legislation. And politicians use this site to get their fingers on the pulse of how their constituents feel about a certain issue and a certain piece of legislation. So it's taken pretty seriously. So popvox.com, you can search for the fair tax and vote in favor of it. So thank you, Joe, for reminding us and for writing that in. All right, why isn't the fair tax, Frank wants to know, discussed by our popular radio talk host or news programs? Well, I think some it is. Sometimes it just depends on the program. I mean, I can't speak to what their agendas are, other than, it's not popularized by some of the main candidates. Like, I don't know if you remember, was it 4 years ago or 8 years ago, but when Herman Cain was big, before he had a meltdown, and he was in the lead of popularity, and he was a big fair tax guy, fair tax was all over the program. What's that about? People having him on and talking about it. So, I just don't think that we've got any prominent candidates right now talking fair tax, and that's the best guess that I can say right now. All right. What is going to keep the government from writing more business taxes or calling them fees? That's from Tim. What is going to keep the government from writing more business taxes or calling them fees? Well, if you're wondering what's going to keep them from shifting the fair tax rate, we've spoken to that, because it's transparent, and we'll eat them alive on the phone lines, Tim, and they won't get voted back in if we're willing to take responsibility for that. And I don't know quite what you mean by calling them fees. Larry, do you have anything else on that?
No, nothing whatsoever. I can't help you on that one.
Yeah, so fairtax.org is the website that has the congressional scorecard if you want to see who supports the fair tax in Congress. You can email us for the recording. We've talked about that. Let's see if there's no... Okay, if there's no IRS when the fair tax is enacted, Larry, this is from Bob, then what entity or agency would be responsible for ensuring that businesses are paying the amount of tax corresponding to their sales?
That's going to be done by the state that is enforcing and administering the fair tax. And the state, being much, much closer to the businesses than the federal government is, will be able to do a sterner job of monitoring the activities, especially if it's one of the 45 states that already have a sales tax. And so they have a history on what the businesses in their state have been reporting, and the fair tax better show the increase in collections for the federal tax that they are collecting. I'm sure there's a margin that they will accept a variation, but if a business gets outside of that margin, they'll be quick to send an enforcer down to that business to do some auditing. Mark?
Thank you, Larry.
Mark, I'd like to go back to Tim's question for a moment about what's to stop the government from writing business taxes. It would depend on what the tax is. Once we get rid of the 16th Amendment, it will not be a tax on income. So they could levy a fee on a business based on their sales or based on their net profit or some other category, but that's going to be a little bit complex, and I would hope we would not get to that point, but it's a good point. Nobody's ever brought that up, and it's kind of horrible for me to think of that happening. But we'll have to wait and see, Tim. Thanks for asking that. Mark?
Yeah, Ron wrote in a good point. Congress with changing the rate, number one, if they do, it affects everybody or every business, and they can't. And the one good thing is that it doesn't. They're not influenced by special interest, where some lobbyist influences someone, and we've got now a winner and a loser. So it affects everyone across the board, and if that's the case, then before they go changing it, they're going to think twice, right? This isn't just for people in their district or for a certain income group, et cetera, et cetera. It happens across the board for everybody. Now that's going to make a difference in their decision making. So that's a good point, Ron. We appreciate that. By the way, Joe, thank you. If you go to Popbox, you're looking at searching for HR 25 or S155. And those are the bills in the House and the Senate. Thank you, Joe. All right. Greg wrote in, let's see, whoever's running the main Fairtax Facebook page, can they link a demographic of how many likes you guys gained after the current debates that happened in the past few months? I don't know, Greg, but we'll pass that on because we have a line directly to AFFT, who runs Fairtax, fairtax.org. So thank you for your suggestion. We'll pass it along. As a manufacturer, do I pay tax to the state where I delivered or the state where I am? Again, Frank, good question. The fair tax is national and unaffected at the state level. So whatever you do now is what you would continue to do unless they made a change there. But you'd be notified about that separately. The fair tax wouldn't impact the outcome of that question. I assume businesses, this is from Tom, I assume businesses are not taxed on third-party payments from insurance since no taxes are collected by the retailer from the insurance payer. Let me think about that. Larry, are you grasping that? I want to make sure I get that.
Not yet. Read that one again. I haven't found it yet.
I assume businesses are not taxed on third-party payments from insurance companies, since no taxes are collected by the retailer from the insurance payer?
Okay,
I
on
think,
insofar as insurances go, there is a tax on the premium. There is no tax on the benefit.
yeah, perfect, thank you. Because the benefit is, I guess you consider it income, right? So income isn't taxed anymore. That's
Correct.
off the table. Larry, this from Luke. How is household size verified for the prebate? So let's say a son or daughter moves out of the house and you go from a 4 family to a 3. How does that get verified?
That family's head of household, whoever it is that the prebate check is being written to, is required by the law within the Fairtax legislation to report any changes in his family structure. Now let's say that a child gets married and leaves the house. That child would now be eligible for the adult benefit as opposed to a dependent benefit. And so based on the Social Security number, the Social Security Department would not, they would detect that there are two locations for the same Social Security number and get that worked out to determine where the prebate should really go. But the real way that it's supposed to happen is that the head of household is supposed to send in a new form whenever there's a change in their family condition.
Yep. Thank you, Larry. All right. Let's see. What happens to Social Security? Asked Terry. I've been paying into it for years. Will I get it? Absolutely. In fact, we believe that the fair tax will save Social Security. Why? Because as we likely know, Social Security and Medicare by certain dates coming up here in the next 20 years is going to go bankrupt. With the fair tax, as it increases the GDP and the overall spending and the economy increases, the opportunity to capture more federal government revenue increases, giving it the opportunity to fully fund Social Security and Medicare. So, Terry, under the fair tax, you are safe. The flat tax is a much broader base because it's only tax. Okay, we got that. All right, Larry, follow this. A retail pharmacy. A retail pharmacy sales are approximately 80% insurance and 20% patient copay. Since the amount of the sale is dictated by the contract, will the total sales be taxed at 23%?
That is a question to be written down and researched.
Yeah, that's a good one.
That's
I've
a
never
good
heard
point.
that.
Now, it's obvious that what you're paying in cash is what is going to be taxed. I don't know about the insurance portion of that. I'm guessing
Well, the insurance portion, from my standpoint,
is not
is
going to be taxed.
it's a line item. Well, no, actually, it's a line item, a revenue line item for the business.
But it's a benefit, it's an insurance benefit that you've paid a premium for. So you're paying tax on the premium, but not on the benefit.
Yeah, I think they're talking about an insurance or the business, like a pharmacy as a business, right?
Right. The
Okay.
pharmacy won't be taxed on it as income because there's no income tax, right? And you as the individual, as the customer, you own the insurance policy which you're paying a premium on, and you're paying a sales tax on the premium. And when you
Got
go
it.
to the pharmacy, you pay the copay or the deductible, whatever it might be, and whatever comes from the insurance company is not going to be taxed any further.
Got it.
Great
Yeah,
question. Great question.
good one. All right, well, we're coming to an end, and we've had most of you hang in there with us, so thank you. Let's see, is this webinar only available live or will it be available later? Yeah, so we record the webinar, Alice, and within about a 2-week period, each webinar is posted up online. and I'll give you the web address to that. It's FL, as in the abbreviation for Florida, fffairtax.com, and you can navigate to the webinar replays. And let's see.
Mark?
Yeah.
Dave Leake has reminded us with a question. Isn't there a prebate adjustment for Alaska and Hawaii? The answer is no. However, there is an adjustment to the poverty levels for those two locations, and therefore the 23% will be multiplied against higher numbers, and that is the way it is adjusted.
Yeah.
Thanks, Dave.
All right. I want to speak to something here. We've gotten so many great questions, and we appreciate your questions. And we want to say that this cannot be the end, guys. We had a lot of people on the line tonight, a lot of newcomers. Thank you for being here. And if what you heard tonight inspired you, don't let this be the end of it. So you see the websites up on the screen, fairtax.org, fffairtax.com. Give your time, bring people to the webinar. We talked about Popbox. Tune into Fairtax Power Radio. Go to soundcloud.com, search for the Fairtax guys. You can give money by going to the website on the screen, which is the Florida Fairtax website, which will then give the money to the National Fairtax Movement, or you could request it to keep it with Florida. You could join the 1040 Club. Go to fairtax.org/1040 and contribute $10.40 a month. I'm a member. Go do that right now. Like, that'd be a great way for you to contribute. Go to fairtax.org/1040 right now. Sign up. You can afford it. Show your support. Like, we need the contribution. Communicate regularly with your elected officials. Buy the Neil Bortz Fair Tax books. Read the legislation and open your mouth. And Larry, we've had a phenomenal webinar tonight, haven't we not?
It has been outstanding. You're right. And great questions also. We haven't been challenged in a long time with the questions like we have tonight. I'm looking for a way to copy the remaining comments that are on here so that I might be able to respond to them later, but I don't know how to do that. There's too many of them.
Yeah, there's a lot of them. Well, we want to thank everyone for joining tonight. As always, thank you to everyone who promoted. Thank you for being here. Thank you, Larry, for your wealth of information and your wisdom. And stay tuned, everybody. Fourth Thursday of every month, come back, bring somebody. Go to fairtax.org, 1040. Go to Popbox. And don't let your fair tax enthusiasm end tonight. So have a great rest of your evening. We wish you all a great rest of your week and a safe close out to your summer, and we'll see you all next month. Take care, everybody.